Good morning and welcome to today's edition of the London Session Open. Today is October 7th and it's 7:30 a.m. in London when I'm recording this market update. We're not doing them live over the last week or so. I'm doing a recording to be able to do this earlier for you than the usual time of 9:30. Let's talk a bit about the markets and what happened on Friday. So NFP numbers were out and we saw the dollar gaining a bit on the news and then moving back upwards. And there's not a huge difference now compared with just before the non-farm payrolls. And the outlook in the short term remains upwards. You can see how we're creating higher and higher lows. We had a break to the upside here on October 3rd. And the market is just trading sideways for now. And it can still potentially go upwards. We also have head and shoulders target, an inverse one with the left, right shoulder and head, and that has a target of 110.51. And I'm not sure if we're going to go all the way up, but it wouldn't surprise me if we go at least to 110.23. That will be the September 24th high, and then we'll see. My general view is that the dollar will regain and it will strengthen. It has to do more with relative weakness than anything else, and I think as long as we're below this high here, which is the September 13th high, I think maybe around the inverse head and shoulders target, I think around that level, so around 110.50 or maybe as early as 110.23, people might sell and then target the lows again. I still think we will go lower, but not necessarily from these levels. On the other hand, if the trend breaks below 109.38, which is this level here, the market will obviously resume its downtrend earlier than what I was anticipating. So what actually happened with the non-farm payrolls then? Well, the non-farm payrolls were not as bad as anticipated. See if I can pull up the actual numbers. I think it was about 138,000 new jobs, which was slightly lower than the projected one. On the other hand, the prior number was revised upwards. So let me see here. The actual NFP number was 136,000 versus the 145 projected, so a little bit lower than expected. And the prior number was revised higher by 38,000 to 168,000. So if you look at this over 2 months, so include the revised numbers from the prior month, it was pretty much as expected. But more importantly, I think a lot of people thought the NFP would be close to 100. I mean, some readings suggested even negative readings. That's what I mentioned, and I think that was really the actual number that traders were anticipating. So we saw that dollar strength, but it didn't really fall through. And then you had lower wage growth, which is increased by 2.9% annual wage growth instead of the 3.2 anticipated and also the prior reading. So less inflation in the system, a stable job growth, and that sort of lowers the likelihood of the Federal Reserve being very aggressive with rate cuts. So overall, if you look at that number, it wasn't necessarily that dollar bullish. It wasn't really enough to cause this market to tumble. It was, however, enough for the stock market to move upwards, which we're going to talk about in a few minutes. All right, this is the pound versus the USD, and the pound is obviously suffering because of this little downtrend. We talked about its inverse head and shoulders target a few weeks ago. The market declined, and then I said up here between 123.86 and 125.07, I think the market will try to sell because we're dealing with a downtrend, and that's why you have Brexit issues that is influencing the markets. The market did indeed move lower from these levels, and it's looking all right. And at one point, if you were short here, you would have made up with about 108 points. Going forward, I still think people are gonna sell if we move to the upside, and I will remain bearish below 105, 125.07. I have no idea when it's gonna go down, but I think eventually, probably by later this week, will probably be lower rather than higher. Dollar versus the Japanese yen as well, as you see, been bearish from this point here. On September 22nd, the market moved down, then moved upwards, but did not trade above my trend defining level, and then the market resumes its downtrend. If you did short at the original entry, at one point you were up with about 101 pip. Right now you'll be up with about 63 pip. And I think if we do swing to the upside, that should be about a 50% correction. And then I do think people will try to sell. Stock markets, though, they're rather bullish, so might even go a bit higher, but in general I think lower, because the yen tends to be guided by general sort of economic activity and not necessarily by relative economic activity. The euro dollar goes down because the eurozone has negative interest rates, whereas the US at least has positive interest rates. So the money would go where you can get some sort of return instead of staying in Europe where you can get where you actually get punished. That's important for the euro dollar. Here it's more about the fact that everybody's cutting interest rates and the whole economy, the world economy, is slightly slower than previously anticipated. So I talked about stock markets, and there was actually very interesting here. I did a little update on the Dow. Unfortunately, I wasn't quick enough to trade on it myself. So what happened here with the Dow then? The Dow was actually very interesting. Let's focus on the Dow today and skip the S&P. So I didn't actually, I mean, I think down here, you know, it made sense for the market to bounce. But had not placed this little Andrews pitchfork, which would have, you know, suggested really that slightly lower than the lows from Friday. So 25,200 and 559, that was the time to buy. That's what it suggested. I did, however, see this. So what happened here is that you got the non-farm payrolls. So you had the non-farm payrolls. So we bounced from the lows, went upwards and then downwards, and then we're trading here. And I actually had a limit order to buy on a little pullback to 120 to 26,213. Unfortunately, that never happened. The market just went upwards. I did publish an article about it, that the trend was bullish above 26,108, and the market moved upward so far. And if we look at this today, we still have a bit more to go. Actually, the median line is up here, which is 26,862. So I think around that level, but probably closer to the September 24th low. I think from that point maybe the market will sell off again. So I'm gonna go up a bit more and then go down. As for the S&P, the idea as well is to be bearish here and here. Actually a bit different. I don't have any median. I don't have that pitchfork in the system. Let's actually see if I can get that in place. How to use a pitchfork. I'm actually going to have a special presentation, not on the pitchfork. I mean, the pitchfork will be included, but special presentation about trend following versus range trading. That's actually happening on tomorrow, 6 p.m. on investingcube.com. Technically via Google, not Google, but this other software, not the other software. Yeah, GoToMeeting. That's what I was thinking. And it starts tomorrow at 6 p.m. It is possible to sign up here. This thing is a little bit crazy, as you can see here, but tomorrow at 8 to 6 p.m. This one, trend trading versus counter trading. And I do suggest, if you do want to sign up, that you sign up via the link I have on my Twitter at AlexFX00. I'm gonna put that as well in the video beneath here, so you can sign up to that link. This one here. Okay, I'm gonna continue here. Anyway, so pitchforks as well, like here, pretty much suggests that you went here 1, 2, 3, almost 4 touch points. You got fifth. This is obviously not optimal, maybe like that. This is always a bit tricky with these pitchforks. It's not the best, definitely not, but it's sort of okay. That's about it. I think it's efficient to use, because if you're looking at all charts at the same time, you're looking at the Dow, Nasdaq, S&P, and just common sense really, then it would have made sense to use this pitchfork. Now here's the S&P. We're just now revisiting these lows. According to the pitchfork itself, we can actually squeeze a bit higher. You can squeeze all the way up here, but as long as you're below this high, which is the October 1st high, I think it would be fair to assume that we're going to go down at least, maybe down to something like the 2,905 level, maybe a little bit lower. And then we're not going to be able to use the pitchfork necessarily, but I think down, and then we'll see what happens if the market's going to bounce here again. The best opportunity to buy though would be actually to buy down at the actual pitchfork, which would in essence put price down to where we were on Friday. Crude oil. So crude oil, let's take a look at US oil. So this is West Texas. Crude oil traded in North America, and the market actually bounced nicely from the lows here, and I'm surprised it didn't sort of trade below and got people stopped out. But I think in general here, like most markets right now, are just sort of trading sideways. There's no question about that. There's also of course a lot of manipulation from governments, presidents, and people trying to keep the markets range bound. For example, when stock markets decline a lot, President Trump talks about, that market should be higher. When crude oil prices are too high, then he says that. And it's also as well in Europe, when central bankers primarily try to sort of push prices into what they think is the right value. So that sort of keeps everything trading sideways. I think here in general, I think we can go up to 55.47, and this is a traditional range bound market. It's sort of very difficult to find something more traditional than this. I think if we do go down to the lows, if you didn't buy here already when we showed you this the first time, then unfortunately you'll be too late. Of course you can maybe scalp this to the upside, but if you want to treat this like a traditional classic trading, range trading, then you will look for a pullback and then price to go upwards. All right, this is the gold prices. Surprised the gold prices are not much lower. On the other hand, I'm not surprised if the euro goes upwards. I think here we're dealing with a downtrend, and the market needs to go down like that. Then get pushed down the sell zone a tiny bit. Stock markets are going up a bit, right? And the NFPs were not as bad as projected. That's one reason to see some profit taking out here, pushing price down to 1480. And then the other thing would be that it's technically moved up quite a bit, right? So unless we have some really bad news, it's not gonna just go straight up. It needs to go down a bit, and then maybe for lower levels you might find a base. I still think I'm not actually as bearish as I was just a few days ago when we had the head and shoulders with a big head, left, right shoulder. I thought we were gonna go down much lower, quicker, and see what happens over the next few days. But I'm a bit sort of, I would rather wait, see what happens down here, and then we'll see if it's time to buy or if it's just should let it decline further. Okay, this concludes today's market update. I hope you liked it, and don't forget to like the video, and don't forget as well to check out and join me for the webinar tomorrow. If you sign in, at least you'll be able to get a link to the recording, even if you can't actually join the webinar at 6 p.m. London time. Have a great day, and I'll see you guys tomorrow. Thank you.